Check 1, 2.
Go! Curious about real estate? Yes! Then you've come to the right place. Get the knowledge you need. Get over the fear and get started. This is the Michael Quarles Real Estate Show with your host, Michael Quarles.
Hello, everybody. Michael Quarles with podcast 136. Today we have the 5 questions sent in by investors, and I'm going to try my best to answer them. And remember, if you have a question, send it to support@bsffacademy.com. One more time, support@bsffacademy.com. Question number 1, here we go. Because of my awesome marketing campaign through Yellow Letters, I'm receiving a ton of phone calls. However, I'm about to leave on vacation. Would it be productive to ask if I can contact these sellers with an offer when I return from vacation? Absolutely. But I'm wondering how expensive that vacation is going to be if you don't. I guess I'm a type A personality where I would take my phone with me and my laptop with me or my tablet, and any of those urgent sellers that wanted to give me their house while I was on vacation, I would just really celebrate my vacation by calling them and doing a deal and getting them a contract and doing all that. Which also leads me to mention that it's really nice having a support staff and a business model where you're not actually running your business is being ran for you, so you can be the entrepreneur and not the technician or the manager. But in due time, but all the above. Question number 2, can you describe how things changed during the real estate market correction of 2007 to 2011? Well, I think there was a period of time that, no one wanted to be in the real estate business, and you probably have 2007, 2011. We started noticing the equity growth in the marketplaces, and that growth rate started to climb. So there was a time in Bakersfield where I'm at, where only a small percentage of people had equity. So the list sizes were really small. And then over year after year after year, as prices went up and started increasing, we started seeing that equity spread increase. And so now in some areas, it's pretty good. A lot of areas we're seeing that we're marketing to have over a 50% equity base. It's not uncommon to see, high 30s, low 40s in areas. So I'm kind of liking it. Now, what am I doing differently than I did back then if someone were to ask me that question? And the reality is I'm making sure I'm confirming value at all points of contact. So that's why I'm getting my BPO and my appraisal. I'm no longer wanting to believe what I believe. I want someone else to prove it to me. And I think in my local marketplace, I'm just as educated as an appraiser would be. However, I still want that other opinion or those other 2 opinions. And so that's going to serve me well. The other thing I've done is I've created what we call a water faucet business. So things can be turned off. And then we have stop loss limits. That's probably something I didn't have before. And so that taught me a big thing is always have the amount of money that you will never go below before you just shut it off and wait for it to recapture. So have some stop loss, have a water faucet business, and then always be confirming value.
Thanks for listening to Buy, Sell, Fix, Flip. We'll be right back. Are you running out of leads? It's time you tried Yellow Letters at yellowletters.com. Get motivated seller leads through Yellow Letters, postcards, zip letters, typed professional letters, greeting cards, door hangers, and business cards. Yellow Letters is a full-service marketing company created with your success in mind. Get the personal attention you need to get your direct mail campaign started and get in touch at yellowletters.com.
And we are back in 3, 2, 1.
Question number 3. What parameters do you recommend keeping tabs on to access changing market conditions? Gosh, we use a form in the coaching program that looks at active inventory that's in contingent or pending status, how much inventory we have in the first place, how many units we have with equity bases, our days on market, how many cash buyers we have, not necessarily just investor buyers, but cash buyers total. So we look at some of these dynamics, and then as we see the medians go up and the inventory either decreasing or increasing. So if we have a lot of units in the market, then we have a low demand, we can kind of tell that prices are going to go down, and so we track that monthly, or supposed to be tracking that monthly in our marketplaces. So we kind of have that in our coaching program. Question number 4. For a fix and flipper, what changes would you have made to your business model to accommodate a deteriorating market? Gosh, buy them lower. And we always have to take in consideration what the property is going to be worth at the moment you sell it. And never take in consideration what the property is worth at the moment you buy it. We always have to look at future value, and that future value could be a gain and it could be a loss. So I think and that's one of the things that understanding how much inventory you have and how much of that inventory is being captured on a monthly basis will kind of tell you if you have a growth pattern or a decline pattern. And I think those numbers are important. But again, always be looking at the number or the value as you would when you sell it, not when you buy it. I think buying it's important too, but we also have to factor in the other. So if you know over a 90-day period you're going to decline 10%, and you would normally buy something at 65%, well, then you're going to have to buy it a lot less than 65% so you can accommodate that 10% loss at the end of the day. So you just have to look at things like that. Question number 5, how do you handle sellers who are asking a reasonable amount for their property, but major repairs need to be done that they could not take care of? Well, if they were asking a reasonable amount for their property, that would reasonable would include any of the costs that are involved in buying that property, holding that property, and reselling that property. So we always take a subtraction for those repairs that are required. Any of the deferred maintenance that the seller has on the property, we take that in consideration in our offer to them. And keep in mind, we're getting appraisals and BPOs based upon as-is condition, not ARV. So I think that kind of answers that question. Great, quick questions today. They were more detailed, or had more depth to them than normal, which I like. Until next time, talk to you guys then. Bye-bye.
Thanks for listening to the Michael Quarles Real Estate Show. Get more info and stay in touch at michaelquarles.com.